But regression to replacement cost is different, in my opinion, from appreciation. Regression to replacement cost simply means that if you can buy the property for below the cost of construction, and when you buy it below, see, remember, when you look at the pro formas that we'll be looking at this weekend, it shows you the cost per square foot. And the cost per square foot, I don't know exactly, maybe Giovanni's team can share this with you better than I, but the cost per square foot in Orlando is probably somewhere in the neighborhood of $80 per square foot. I'm just gonna guess, it's somewhere close to that. So if you can buy the property below the cost of construction, but here's the thing the pro forma doesn't tell you. It doesn't include land value. So if you look at the typical $100,000 single-family home, the land value is probably somewhere in the neighborhood of $20,000. So to find out the real cost per square foot, you have to do a different calculation. Okay, and why don't we just do this right now while we're talking about it? Okay, so you got your pen, do you have your smartphone with your calculator? In the old days, we actually provided calculators at the meeting. Okay, I have a box of calculators. I really do. I should sell these on eBay, but they're not worth anything, okay, right? And now everybody has a calculator. Thank you, Steve Jobs and the copycats at Google. Okay, so pull out your calculator, we're gonna take the typical $100,000 house, and we're going to assume a $20,000 land value. So it's $100,000. Land is $20,000. This is pretty simple calculation, I know. $80,000 is the improvement or the structure sitting on the land, right? Okay, so let's say that this house is 1,400 square feet. What's 80,000 divided by 1,400? How much? Okay, so $57.14, right? Is that what you said? We'll just call it 57. $57. If it costs you $80 per square foot to build that house, did we buy below the cost of construction? Yeah, we did. Okay? If a hurricane comes along or a fire comes along and destroys this structure, depending on the type of insurance you have, the insurance company may pay you the full cost to rebuild it, or they may pay you a depreciated value on it. But if it's $57 per square foot and it costs $80 per square foot to build it, that delta between those two is built-in equity. Now, I understand completely that you may not be able to turn around and sell the property for more than that. But that equity is kind of hanging there, and this is a great safeguard. It shows you that in addition to the potential for future appreciation, before you get to appreciation, the first thing that happens is regression to replacement cost. And when, Carrie, it was kind of funny how you introduced me because you said, Jason looks at every house as a commodity, right? See, I'm really at heart a commodities investor. I like lumber. When I'm trying to pick up a girl in a bar in the future, she's going to, of course, ask me what I do, and they always do. And I'm going to say I'm in the lumber business, okay? Oh, well, you don't have a beard. Have you heard this thing? What is it called? Okay, we have metrosexuals, right? But there's a new thing. There's like a lumber sexual. No, I'm serious about this. This is a thing, okay? Like the lumberjack look, okay? Do you know this? It's a thing. Trust me. Google it. There was an article about it. It was funny, okay? So that's like a look. So I'm in the lumber business, right? Commodities, packaged commodities business, right? We invest in the commodities. But when they're labeled as real estate, when they're labeled as income property, it brings special characteristics to those commodities that we don't get anywhere else. You can't go on the commodities exchange and buy lumber, copper wire, petroleum products, glass, steel, all the ingredients of a house and get 3-decade-long, artificially low fixed-rate financing. And you can't take those commodities once you encumber them with that good debt, okay? Debt being my favorite 4-letter word, okay? Once you encumber them with that debt, you can't turn around and outsource that debt to a tenant and say, hey, you pay my debt for me. Special characteristics of income property for sure. So regression to replacement cost happens before appreciation. When you see the market turn and prices start to come back, the first thing you get back is the regression to the replacement cost. In other words, this $57 per square foot house going to $80 per square foot, the replacement cost. And after that, you get appreciation.